Hi, I'm Alex Davies, founder of Wealth Club. Today I'm with Mark Pearson of Fuel Ventures to talk about their EIS fund. First, tell me a bit about yourself and what led you to setting up Fuel Ventures.
Sure, I'm very proud that I come from a different background, and that's an entrepreneurial background. I'm proudly that I was self-employed since the age of 21. First in the catering and hospitality industry, had 3 different restaurant venues, then moved into technology and digital, launched my own digital internet business in mid-2000s, and scaled that from my bedroom, as all best companies start out, self-funded, no external capital, grew that business. The company was called MyVoucherCodes. It was a coupon and price comparison website. We had consumers on one side who used the website for free, and we had retailers, thousands of different online retailers on the other. I scaled that business to 100 employees, up to around 10 million revenues in about 8 years, with 3.5 million profits. And I ended up exiting that company in 2015 for around 55 million in total value. So it was a very exciting journey, hands-on experience, building a company, all the challenges and operational issues. I make it sound like a wonderful journey. The reality was you were putting out several fires at the same time, but continuing to grow the company. And very important, people management was really, really important for me. I was fortunate enough that company was very profitable. I got to start investing into EIS myself, into a portfolio of several companies as an angel investor. That also gave me a great base experience to understand what's the best way to invest, how can I add the most value, and then that was when I decided to launch Fuel Ventures.
Let's turn to the fund. What sort of companies are you looking to invest in?
Okay, so the companies we focus on are platforms, marketplace, and software companies. And you'll see a bit of a trend in the type of businesses I like. I like businesses that can scale globally. I also like businesses that can be very profitable. So if they have a good gross profit margin, 40, 50, 60, 70, should I say 80? When I talk about software companies, it's achievable and we have some doing that. So they're what excite me the most. I like companies which we can get a hold of, we can invest in, take substantial stakes and help the founders scale. And the key word is scale globally. You know, the UK is a small dot on a global map in the day and age we live on the internet and digital. So I'm really doubling down and focusing on how we can grow companies even bigger than the success I've had previously. You know, older, wiser, more experienced, more ambitious maybe.
So do you want to give me some examples of companies you've invested in?
Sure, I'll give you an example of one that's doing very well at the moment. So we invested 2 years ago in a company called Shift, and I'll describe it very top level. It's a logistics marketplace. So it has van drivers and delivery drivers on one side, and it has consumers and businesses on another. This company was founded by a founder in Plymouth. He was a young guy, 23 years old. He's been doing this sector for a number of years. He'd self-funded it. The business was up to around £30,000 revenue a month. Actually, since we invested, we really helped him structure up the business, get ready to scale. And in the last 12 months alone, he's gone from around £60,000 a month to the last month doing £850,000 in revenue alone, with about a 35-40% profit margin. So you see, like I said earlier, good business, it can scale very well, it can break even and get profitable, which is sometimes a word that you don't hear very often in these parts, which is very, very healthy. And now we're just about to take him outside to larger institutional investors to help him fundraise, a substantial fundraise hopefully, to take it to the next level internationally.
Okay, and will any of my money go into that if I invested with you this year, or was that?
Potentially, I'll never say never. I'll explain the stage and that we tend to go for. So at Fuel Ventures, we operate an early stage investment fund. We invest in 10 to 15 companies a year. With the Fuel Ventures EIS Fund that we're discussing today, we're looking for the winners. We're looking for the ones that come out. So actually in April just gone, we invested over £1 million into Shift, so that one's just been done, and maybe now it's institutional, the valuation is going to be considerably higher. I think that's a question we're going to talk about soon, actually, to talk about what the market looks like. But maybe we have a number of other companies that have gone from that early stage, which I will say are higher risk, and that's the whole point. We have 27 portfolio companies within our network now, but really investing early and helping them take to the next level. So my job here is to find the winners. You know, not all of them are the outright fly away successes, so investing in them ones and taking it to the next level is the focus.
So you're talking about how involved do you get with them? What do you actually have to do with these businesses typically?
Yes, so I like to use the word very involved. And one thing I always get asked quite a lot is a lot of people say they're hands-on, they're supportive. Well, I invite you down to our office and see. We're based over in Angel Islington. We have the majority of our companies under one roof. So at least for the first 12 to 18 months, our companies move in with us. Now, you can't get more hands-on than this, but it's not just a show. It's not just about doing it. Actually, by sitting them next to each other, by having myself and my team amongst them, you can really help. It's being the eyes, being the ears, and just being there for the companies. It's normal that companies at this stage have rocks in the road, they have challenges, and actually my phone tends to be the hotline, my team's phone tends to be the hotline, but most importantly, and I love this, we tend to be the glue, because now we've got around 30 portfolio founders, given that some companies have multiple co-founders. They are the real knowledge and experience in the room, because they've built companies from anywhere from 3 or 4 years old companies at Series A and B to very seed stage companies. And actually, if you're asking for knowledge or information or expertise, who's better to ask than people doing it on the ground today? So knowledge transfer, sharing resources, sharing expertise, price comparison of suppliers, all very, very valuable if you want to build a successful company.
And where do you get your deals from?
I think we're very lucky with deal flow. So ever since I was an entrepreneur and starting to make my own angel investments, I've had a lot of deals. And I'd say 24 months ago, we were around 150 deal flow coming into our inbox and our channels via our website. Actually, in the last few months, it's been 200, 250. So the momentum builds, the name builds, our word gets out in the market. Importantly, some of the best deals we're seeing are coming from other VCs, and these are A-round institutional VCs who know of Fuel Ventures, who know of me, who know of the team, and they're saying, listen, have a look at this one. If it was in our criteria, we would, so we'd like to keep an eye on it. And some of the deals we've done recently have come that route. So real diverse range of deal flow. What I'm proud of, we tend not to be fighting other VCs for our deal flow, because we sit in a real sweet spot. It's very rare in London and in Europe that you can find an investor that can write £1 million plus ticket. And by that I don't mean excessive A rounds, which tend to be 5, 6, 7 million. Also, not the very early seed tickets, not the spray and pray model where it's a few £100,000. Actually, solid amount of money to take a proven business concept and take it to the next level. And that's really the Fuel Ventures sweet spot.
Okay. You talked about one company. Are there any others you've recently invested that you want to talk about, so we really understand what our money's going into?
Yeah, sure. So one of the hot ones is called Distributed. We invested in that one around 12 months ago. If I tell you some of the challenges in the world outside this window today, so tech resource is becoming limited and coming stressed because every company is becoming a tech company. There's not enough tech developers coming through the systems when we talk about education. There's not enough coming through. And also some of the old, and I call them the dinosaurs, some of the old companies, the big banks, the big corporations, they're not as sexy anymore to these young developers who like the flexibility of new ways of working. So this platform is a way to connect very high quality global tech workforce to super big companies, and they can't access them. It really want you to put you in the mindset of, let's look at an office outside that window, and let's say it's a big corporate bank. Do you really think no matter how much they pay, they're going to build the best innovative talent in that office block in the middle of a city like London? It's not really happening. And one of the big problems is tech developers are staying in companies less than 18 months. So where's the innovation going? So this platform is essentially connecting corporates and other innovative companies to the best talent on demand. So look at it as a kind of Upwork, but a professional at work. Upwork seen as more lower class, deal by deal opportunities around the world. This is top level talent, and I'm actually very excited about it. Their revenue's grown like crazy. Some of the deals in the pipeline are very excited. I won't name names today, but some major change in deals about to be announced for this company. So you can tell I'm excited about it.
Okay. And you've obviously had your own very successful exit. What about exits for your investee companies?
Yeah, so we've been going for around 4 years now, Fuel Ventures. We've built a portfolio of 27 companies, counting today. We more or less do one deal a month. So we've had no exits yet. And actually, I told investors at the time about 5 years average hold time. Some of them 6 or 7 or a little bit longer. And our lifetime of the fund is 10 years. So 5 years on average would be my expectations. If I give you an example of Fund 1. So Fund 1, this company is 3.5 years old. I won't name the name today, but when we invested 3.5 years ago, it's doing around 100,000 in annual revenue. That same company is doing around 50 million in revenue this year, and actually just won a big scale-up award in London in the tech sector. I'm not for awards, but I'll name that one. So that's an example of a company, and the reason I mention it, we've been offered off the table opportunities from private equity and VCs who want to buy out our stake, which would give back the whole of Fund 1 and a 2 or 3 times multiple on Fund 1. So I'm starting to look at that, probably in the next 12 months. So watch this space, and I think very soon we'll be able to do that. But that's the kind of winners I'm looking for in the portfolio. But don't get me wrong, we did 7 companies in Portfolio 1. Now, I will say 6 of them are very strong, and 4 of them have got multi-million-pound revenues. So I think we're doing something right. I think our model's working, and I expect to get them exits coming out soon.
And what about failures where it hasn't gone so well? Do you have those?
Yeah. So failure happens in business. I think our model, by being hands-on, being supportive, taking a board seat and having your finger on the pulse is very, very important to me. I say to investors, out of every 10 investments we make, I expect 2 to 3 outright failures. That's the life, that's the product we invest into. You can't win them all. But actually, if you think 2 or 3 should be mediocre exits, and hopefully 2 or 3 should be substantial exits, that's how I look at it as a good portfolio. And we aim for a minimal of 10x within our portfolio, which tends to be higher than what some others offer. But the stage we invest in and the size and opportunities and some of the markups we've already seen from institutional investors come in, I firmly believe it's possible and doable.
And what about valuations? There's a bit of a bubble out there, some people say. Are you finding that?
Fascinating. I use the word, the market is frothy, and I say this all the time, but actually in the sector we go into, and it is diluted, I get companies come in through the door wanting 10 million valuations for hardly any traction. And I do remind them, literally, I sold my company for X and I had revenues and profits. So I fully agree with you. I think the sector, I think the world of technology is frothy, but actually for me it's about entering at the right price. So we'll negotiate down very hard. We haven't got a lot, winning 9 out of 10 deals, so we haven't got multiple VCs trying to win our deals through our deal flow sources. And I would say also, by getting in early, I'm willing to take that journey, and early for me is a product with revenue, with customers, and we're ready to scale up the businesses. So even though the market might be, prices may be high, I say get in early at realistic prices is the obvious way. That's what I put my money in the fund alongside. So think of the mindset as very much getting good value. But actually, if you go up that journey, it can be actually good to use institutional money where it can be very competitive. Don't get me wrong, I'm taking Shift that I talked about earlier. Currently, we're in 30 or 40 institutional VC conversations. Let's get it competitive. That's only good for investors at our stage. More capital in the company, less dilution. So let's use it to our benefit.
Finally, Mark, I want to invest in an EIS this year. Why should I invest with you?
I really believe Fuel Ventures is very different. I think we're doing things differently. I think we're doing things better. I think we're doing things very hands-on and very entrepreneurial. And I really believe it will give us very large returns down the line. I personally invest in the fund alongside investors and pay the normal fees, so that should give investors confidence. But more importantly, we invest in around 10 to 15 early stage businesses a year. We already have them in the portfolio, and this fund in particular is about following our winners. So 12 to 18 months after we've got to know the companies better, after we've seen them perform, after we've gone through challenges and fixed them and really understand the tenacity of the founders and have they got the ability to bounce back and monitor their revenue. We literally have our finger on the pulse of all our portfolio revenues, and the ones we see are ready to fly, that's what we're using the capital for. So I think it's a great opportunity. I don't know anyone else in the EIS or fund world that knows their portfolio as well as we do. As I told you earlier, we base ourselves in the same office of them, and we have that fantastic network. So I think it's a good opportunity, and I hope your investors do too.
Mark Pearson, Fuel Ventures, thank you very much.
Thank you.